Hello everyone, this is Teddy Keckstead, and we are here with a weekly Forex analysis for the week of October 18th through the 23rd of 2020 to see what's going on with the major markets. We have a couple of signals that were triggered over the past week or two. Some are longer term, some are short term that are still in motion, and we will see how they are shaping up and how the markets are starting out. We are now at the very beginning of the week and moving through our fourth quarter very quickly. So with that, let's get our disclaimer up real quick just to show you that and remind you that this webinar is for illustrative and educational purposes only. All right, with that, we just want to have a quick plug for the book High Probable Japanese Candlestick Patterns, which is available on Amazon.com in Kindle and paperback versions. And we're going to actually be looking at some of those signals today. So we have our live action screen up now, and we have the Forex Trading Unlocked YouTube channel up. Remember, anytime you want to go to check out some of our past videos, we have different types of playlists for some of our different things that we've done, whether they're with eoption.com or on tfnn.com or with the Nadex, and also that we produce ourselves. So you can always come there to find past videos and lessons and things like that. So with that, we are now at the forex-trading-unlocked.com website. I already went to the top tab to pull up the workstation page, and now we are going to go down to the Euro, which is pulled up already. Now, as you can see, I have a downside target area. So now the Euro US dollar had produced a head and shoulder formation that was completed already back in September here. That's this initial slide. It took us down to this first major new move low, and this was after having made higher move lows, lower move high, and then lower move lows. And now we have confirmed a lower move high here recently. This was a week and a half ago. And now the question is, are we going to continue lower, or are we going to bounce and all of a sudden become bullish again? Currently, off of this head and shoulders formation, and for a more intermediate to longer term downside target, we have these levels of right around $1.1521, $1.1360, $12.23. So most likely over the next week and a half to 6 weeks, we have a very good chance of getting down into this 115.21. I wouldn't say 113 area unless there were some real extreme things that could happen politically and economically in the EU, which is not outside of the realm of possibility. Remember, going on, and it is scheduled for December 31st to be completed with a whole bunch of trade deals and things like that. And there is all kinds of chaos when it comes to negotiating that between the EU and the UK. The UK side is pretty steadfast on what they want to do, what they're trying to accomplish, or excuse me, and what they will tolerate with the EU. And they definitely have certain things that they are completely against, but there's nothing we can do about that. So we'll just have to see how that goes. It will be interesting, but I think that is a factor that's going to weigh on both the euro, the Swiss, and the pound. So all the European major currencies versus the dollar, which are one of the biggest weights, or some of the biggest weights in the dollar index, I think they're going to be struggling most likely from now through the end of the year. So we're going to have two little interesting timelines here. So let's put a vertical line here. Here is December 31st. This is the last trading day of the year. And then we have elections. So we have November 4th. After November 4th, be done. So now the question is, what will happen afterwards? Well, we're going to definitely see, I would think, a lot of volatility. The question is in which direction. We know that no matter what, between now and the end of the year, on this December 31st. Now, this has there's nothing political about this when it comes to the United States. Because of the separation of the UK from the EU, that means all of our trade deals between us and the EU, and also between us and the UK, they're now going to change because of the fact that obviously England has left. So we are still working and hammering out some things with them with that. So that's not political by any means. This is because of what they're doing over there. And this all has to get hammered out by the 31st as well. So that's going to probably, I would think, be one of the biggest drawdowns to those European currencies. So I wouldn't say that the dollar is going to be strong over the next not just week and a half, but probably month and a half. I just think that the other currencies are going to start to lose their momentum, and there's a lot of, like I said, geopolitical things that are more negative towards their currencies than positive their currencies, at least in the short run. Once they get past the first of the year, going into 2021, everything is going to be settled, and then we'll see how business starts to move from there. So we may be just heading down into an area where we're going to set a new base and what have you. But here's the one thing you have to think about for the most part when it comes to the euro right now, as well as these other currencies. We've had more volatility in these European cross rates in the past 6 months than we had in like the past year and a half. So for us to really get any major moves right now, I think we're not going to get any extremes. So this is probably the lowest, $1.1367 is what you would see for any extended slide. Now, if we do get above this last swing high here, 118.35, so for you aggressive bulls or your weak shorts, this is definitely, or actually any type of bearish sentiment. If you're looking to sell right now into this area, I mean, just by attrition, we could take out this downward sloping resistance line. But I think the key level is this $1.1835. If we get above this, any breach of this level here confirms a bullish breakout that will have us definitely probably making a shot at making at least an attempt at getting up to this 120 area. Whether or not we pierce that and make higher move highs will remain to be seen. But this is definitely an area where I would not want to be short against anymore. So this right now, you could look at it as an area where it's giving you a good opportunity. If you look at right now, we're trading at $1.1719. You know, we're looking for a target of at least $1.1521. So that's a two-handle, $2 move. In the euro US dollar with the risk, it's $1.719 of 18.35, just a little bit over a full basis point dollar there in the euro US dollar. So just your risk reward right there on the first target is 2-to-1, and we're looking for it to get more down towards the 13.67, which that's a much bigger return on your investment if the bearish play pans out over the next month and a half. So to see how this coincides with GBPUSD. Okay, there we go. So the British pound, this also has been in a bearish way. Now, the funny thing is, this gave us this little sell signal here, this big bearish engulfing line sell signal a week ago. That was the beginning. That was the second day, right after where this market had topped. Now, this market right now had been in at least a neutral posture after being in a bullish fashion against the dollar, basically back since the middle of March. After when the pandemic first started to surge and hit, this is when the pound bottomed versus the dollar, and then it just continued to rally up until September, where it topped, and now a lot of people are bullish, but I have to say, honestly, we've been making lower move lows, lower move highs as a whole. I think this last high here was the extended corrective rally, and now we're ready for another wave down lower, the third wave lower. So I would say that right now, one of the key things to look at here would be this kind of trend right here, keeping the base of the current bull market. If this is only a balancing right now, a little sideways and kind of basing area, then we should maintain this upward sloping support area. Only a failure from here would really truly confirm the sell-off as far as in the longer sense. However, in the shorter run, if you look at this high and then how we've been making lower move lows and lower move highs, you know, this really, the key level I think you really have to watch out for is this recent high. So I think that the bears against this, because the sell signal, this has us no matter what, at least in the short run, if you look at it on a very, very minimalistic level, here would be the 50% line right here from the most recent low and high. And I'm just showing you a way of finding a really quick target zone is by using these fibs, the 50% and the 0.618 is a good way of finding a good target area off of a wave. Now this is a very small wave, and this is why you have to be careful. If this is a corrective wave, like I believe, then these levels are going to be useless. It's just a matter of time before they start to continue to slide through them. If this signal is not a good signal, well, we've already pierced into this area, so we've already kind of hit the target already. So now the question is this the beginning of the new wave lower, and is this market a bear, or is this just the basing before we have another rally? So what I would really key off of is, like I said, this last high right here. Let's change this color so it makes it easier to see. And then also key off of this low right here, because that will be your main areas of direction for the longer term. But definitely for the short run, we have this bearish engulfing line sell signal. So here's your first target here, okay? But now let's look at it in a different fashion. Let's get rid of this to make the chart a little clearer. So if we went back, you see how this market's been trending. You can see how it's really been just grinding and grinding. Had a really nice run over the summer. It pretty much has exhausted itself. Now you could think of, since we are at the end of the quarter, that maybe there was an unloading of profit taking from this long-term trend. You got to think about third quarter ending. We're coming into an election, you know, for the U.S. as well as the Brexit. So politically, from the beginning of November and through December, we're going to have nothing but chaos in the dollar and all the major currency crosses versus the dollar. Or excuse me, the European ones, rather. So that means we're going to have a lot of chaos, and it means a lot of potential just sideways markets. So I'd be very leery of the major trends. Like, currencies love to trend, and that's what I love about them. But because of what we're coming into, I'd be very, very careful with it, that we may be beginning to go into a period where we're setting the range. Like, it could theoretically right now be that this high that we set right here a week ago and this low that we set back here in September, we could bobble along this for the next, like, literally 2 months. Now, does that mean we're just going to be totally in a stalemate as far as direction? I don't think so, but let's just say that we did go because of the politics and whatever, and we just got to here. All right, so that means, what do you do with that? Well, especially since it's the pound, there's not a lot you can do with that as far as range trade. I mean, as far as a swing trader is concerned. But there'll be a little bit of movement. But like I said, look for a signal and wait for a sign. Like right now, we've already had this triggered. We alerted our followers to last week. We were short. And now as far as our extended target where we're looking for, it's a little bit further than where it is right now. But like I said, for the short term, if you're bullish this market, this is a great support area. You probably are in the clear. So I would use this low that was set here. I mean, here you had higher move highs and higher move lows in a shorter term trend. But in the longer term, you had a higher move high and lower move low, and then, you know, this lower move high, this lower move low. So this was the bearish part, and this could have been just the first wave, which is one. This is our second wave, which is a correction. So that was this right here. And if the sell signal is a true sell signal, then this is the beginning of the next wave lower, and that would have us going from here and then going down this way, which is very likely. This could very well happen if we have negotiations that break down. Not to mention you have the COVID-19. Now you also have businesses that are fleeing the EU to go to the UK, and that's a whole nother issue as it is. That's people aren't even really getting into. And if that's really the case, then you're going to have a big turnover in currencies, because if all these companies are leaving, say Germany and other whatever, Spain and Italy and what have you, and then going to the UK, they'll be dealing in pounds versus euros, or at least in the in a lot of cases they will be, where they wouldn't be before, where they were just dealing in euros. So that's going to have a big currency issue as far as demand and supply. Well, supply is not going to be the problem, but the demand for certain currencies will be versus other currencies. So the pound euro is a trade that I would really start to watch as far as for looking for a real swing trade. And this is what we're really getting into today, is that, you know, when it comes to currencies, it's not everything versus the dollar. So look at this thing. What does this show us? Well, I'll tell you what, it shows us a lot of volatility up until the past couple of weeks. So this is kind of maybe a little foreshadowing also of what I was talking about, is about potential stagnation. So let's look at the pound versus the Swiss before we get to that. And this is just the, oops, that's not the right G. Oops, got the wrong PCHF. Okay, that's right. Pound Swiss. So the pound versus the Swiss. Okay, this is another one is getting into. Whoops, how did that happen? All right. Oh, whoops. We don't need this. All right. Okay, I'm got to get that off. Get the pointer back. Okay. All right, there we go. All right, so we have the pound Swiss. This is going nowhere. It's going sideways. Very interesting as far as how we had this major move in September, and then all of a sudden it bounced. This was a big sell-off here, so the pound was strong versus the Swiss, but not like it was against the dollar. It did have its nice bounce, but it already topped out really back in May, whereas the pound just recently topped out versus the dollar. So that's where I think you see a lot of the weakness and stagnation with the pound, is where the sideways is going to go to, is that the trend is over with it as far as pound strength. Definitely until we have a resolve between, like I said, the Brexit and the trade deals. Now, where you're going to see some good action, I think, is in the, not the British pound, the US dollar, Japanese yen. This one continues to disappoint on most days, but it is a grind lower. It continues to be a bear, and I think that the dollar right now is going to still remain in a really fixed way with the US dollar yen through the end of the year. I mean, it could have bottomed already, and now we're going to see a big rally and show of dollar strength. But usually when you have a strong dollar versus, like, say, the pound, the Swiss, and the euro, the yen usually goes the opposite way, at least as of what has been the normal reaction on most longer term trends for the US dollar yen when it comes to those bigger weights in the dollar index. Now, it doesn't mean that the yen doesn't travel in a bullish way or a bearish way with those other currencies at times. It certainly does. But as far as right now in the longer run, I think that you're more likely to see a neutral to higher trade with the dollar versus the euro and the Swiss and the pound. But then with the yen, I think you're still going to stay in a sideways to lower posture, pressuring lows. Like, I think that you have a better chance of coming down and giving this level here a test than you do coming up and, say, giving this level here up at like 109 here. Let me get this down a little bit. There we go. Okay, so if you look at this range right now, I mean, I was very bullish this market back here. This was even when the coronavirus first hit and we had this big bounce back here. Like, I was very, very bullish, or at least neutral, and I thought that it would be pressuring this $1.11 to $1.13 area, and while the other currencies would be, while they were gaining strength versus the dollar. But no, this one just kind of went sideways, and as you can see, it stayed. Like, if you look at April, I mean, 109, look at this, 109 to 104. That is pretty much where it's at. So I don't think that even if you get a rally, you're going to get above that area. I think that we could be basing. That's very possible. But then also we have been trending lower, making lower move lows and lower move highs. that's the trend. That is indicative of a lower market. So I think we're going to have a better chance of coming down to test this 104.019 area than we do, like I said, going up to higher levels. But if we do seem to get a rally, especially if we can come out and take this last high, then that would be an indication of, obviously, a show of strength. Now we have this little action here. See this little red bar here? That happens to be, ironically, a Japanese candlestick pattern, a high probable Japanese candlestick pattern, which, like I said, the plug for the book, which you can find on Amazon and Kindle and paperback version. And that's one of our top signals, is how to use the bearish and bullish engulfing lines. So this happens to have come after and made a short-term lower move high. After all, we have this lower move low down here. This is a lower move high after this lower move high right here. If this market is basing and this is a low, then this is a very, very key level. So if you're bullish, then this is your breakout area for sure. This is a very big area. Now we have, like I said, this sell signal here, and the question is, how low will it go? You know, if we just do the basic fib thing, which we could easily do right here, we just go from here to there, and then we can show you with this, the horizontal, the 50%. So here's the 618. Okay, so here's the high, and we definitely came into the 50% level already last week. So we've already touched into what would be our, you know, short-term correction target area from the sell signal. Now the question is, are the bears really here in full force, and are they going to remain? I would say most likely that we're going to have a test, and that we're going to get a little slide below that. Like I said, the main reason is because the yen has been going in an opposite way of, there we go. So this low here, this is a key area here. Any failure from here definitely has us bearish. Right in this 104.95 down to 104.87. This support band here, if we have a failure here, that's indicative of a continuation of the bearish trend and targeting this 104.01 area and newer move lows for the US dollar yen. And like I said, this would be even if whether the euro and the pound, like the euro US dollar could be rallying and the pound US dollar could be rallying and the US dollar Swiss could be falling apart, and this market here would be going the other way, like most likely. But if they did all do that and had a major move against the dollar, then that would also help to hammer the US dollar yen to yet lower levels of support. But if it's just a grind of a trade or just a spiky trade for against the dollar with the other currencies, and the dollar stays bullish, it doesn't necessarily mean that the US dollar yen is going to all of a sudden become bullish as well. Like I said, I think this one most likely will continue to grind its way lower. So that's the way you want to look at that one particular Asian trade zone currency. Now the Australian dollar, US dollar is another currency that has made a nice little move lower over the past month and a half after being in a major bull against the US dollar. And this is another one that I think topped out the other week ago, and this last high here is a key level, just like this last swing low is here. In between here, it's kind of a sideways trade, but I would really lean towards being a bear right now and looking for a test of the lows. One of the major reasons for this is Australia has a lot of economic problems, and especially since the price of gold has come back a lot, and oil has been rather secure and stable, as well as some other precious metals and commodities that they are key in exporting. That's weighing on the Australian dollar. And as far as you got to remember, this thing's been rallying against the dollar since the middle of March of this year. It bounced after this Corona thing all hit the markets, and now it is looks like it topped out it has topped out for sure in the short run at the beginning of September. And now the question is it getting ready to make another explosive move towards new highs, or is this market stabilizing to actually becoming a little heavy and becoming bearish as we head through the next few weeks. Right now, I have to look at it as the high that we set a week and a half ago here, around 72.45. This was the lower move high after we had this high here. We had this lower move low here. We had this lower move high here, lower move low. This is a lower move high. And now we're getting ready to test these lows. You could also argue that perhaps the low we had 2 days ago stamped the low for a while, and we're going to make a run for higher move highs and resume the overall bull trend. It's very possible for that too, but I think you have to have a breakout of 72.45. Anything below there, I think, has us in a bearish way in a sell rally forecast, and targeting definitely a test of this 70.09 area. Now, another part of this trading zone is the New Zealand dollar, US dollar. Now, New Zealand isn't having quite the problems that Australia is, and Australia is starting to have a lot of political problems and some unrest and things over there. New Zealand seems to be not immune to it, but not having quite the difficulties. This one here, I think, if anything, is in a sideways pattern. Like, if the dollar is strong, that wouldn't necessarily motivate me to be a big bear for the New Zealand dollar, US dollar. Now, the dollar is weak, all the more reason to have this mark, New Zealand dollar, US dollar, stay in a sideways to higher fashion, but not really that much higher. At least that's my opinion right now. I think, if anything, they've really started to set their range where they're going to probably bobble between this last higher move high that we set back in September. Oops. Let's move this. There we go. Okay, so that high there. And then we have, well, this last low here from 2 days ago is a huge one. Now, I think that what we're going to have here is a trap. I think that today, right now, New Zealand dollar, US dollar is firm. It may even settle slightly higher on the day, but I'm not really convinced that this market really has a lot of strength left in it. So I would use this 66.82 as a upside breakout point. If you're bullish, that's a good target to look for a breach of this level to continue a higher move high. But a failure here from this low here, if you're long, I think it's very troublesome, because it'll be testing this low in a heartbeat, and then once it does that, if it comes and takes out this low, that's then all bets are off, and we definitely have a confirmation of a bearish formation. And then you'll be on the wrong side. So be very leery of that. Unless you have a signal, I would be looking more to sell this one than to buy this one, or it could be just chopping around where you're just going to get chewed up between the 60s, like 67 even, and 65, 80, 65 half area around here. And that could very well be, if you look at the bulk of the trading over the past 3 weeks, that's where it occurred. And when it wasn't there, it just drew you out and then snapped you right back to kind of give you a really bad deal. So now let's look at the US dollar Canada, see what's going on in our North American trade zone. What can we say about this one? This one, it looks like it wants to try and bottom. It made a nice little show of strength last week and then fell back. Right now it's a little bit lower on the day to start the week off. But overall, I think this one is basing. And also, I think you're going to probably see more sideways between US dollar and Canada, especially because they're doubling down, at least until after the elections, that there's no crossing the border. Canadian border is locked to Americans, except for trade. So that's a big deal. Well, they don't have our money going there, and we also don't have our goods going there either. So I guess who knows how that works with Hollywood, because I know we do a lot of filming up there. Anyhow, as far as the US dollar Canada, I think they're most likely setting a range, and it's just a choppy mess right now. I don't have any buy or sell signal here. I just think that it's kind of neutral. And this could be where you get fooled, where, yeah, like let's say the US dollar Canada, it's going testing lows, while in the US dollar yen is testing lows, and then the euros and the pound and the Swiss will get a rally versus the dollar. And those will probably be short-lived, like I said, over the next couple months. And I think you're going to have, we already had a disconnect in those currencies and the dollar trading one way, where everything was because of the coronavirus and what have you. And unless we have a second wave, across the globe, I don't think we're going to have quite the radical moves that we had back in especially March and April. Now, don't kid yourself. If the things grow, like I'm in Illinois and Chicago, and all around us, the totals are growing at an exponential rate now in some places, and even in Illinois, we're now at a 2 weeks in a row, a 2 week marker of every day having higher numbers, and it's not about what your take on the virus is. My take is that if it really starts to explode again, that the currencies are going to have another big snappy month, which will be just reminiscent of like last February into March and April, where they really were all over the place. And don't think that the U.S. dollar can't get a nice rally before maybe it gets its butt kicked, you know, or vice versa, and then all of a sudden the dollar comes screaming back. So flight to quality will become an issue. So, but right now that's not on the table. Right now we're looking at elections, and then we do have, like I said, the cross-border things with U.S. dollar Canada that's impacting that. So we're waiting for a signal here. Hopefully we find one. Let's go back to the U.S. dollar Swiss over in the European quadrant and see how this is shaping up here. Now the U.S. dollar Swiss, this is another one where it's a flight to quality currency. It made a head and shoulders bottom. It's like the opposite of the euro, U.S. dollar, which is the upside down version because of where the U.S. dollar is located in the cross writing. But this one here does seem to be bullish. Right now it's slightly higher on the day, which kind of goes with what we're saying about U.S. dollar strength is probably going to continue to seep into the market. Now here we had a buy signal right here. This is a bullish engulfing line buy signal for the US dollar Swiss. So this is another reason why it looks like the US dollar probably in the European trading area is going to hopefully get a little bit of a lift for the bulls. That would help go with these signals that we're getting in both the Swiss and in the euro and in the pound. And that, like I said, this has to deal with the European currency zones like we were talking about earlier. So I wouldn't be too overzealous either on how far this is going to go. With everything we were talking about, we could be set for sideways. But right now, I think with the U.S. dollar Swiss, it's neutral to higher sideways. So I'm not looking for the U.S. dollar Swiss to go make a run for 98, 99 or parity or anything like that. But for it to get up and challenge these recent highs in September, it is very, very possible. So with that being said, I want to thank you very much for checking us out for this video, and don't forget to subscribe to our YouTube channel, as well as check out the book High Probable Japanese Candlestick Patterns, which is available on Amazon.com in Kindle and paperback versions, and that way you can learn how to trade these signals like the ones we just talked about here in the US dollar Swiss and the other markets. Have a good trading week, and we look forward to you having you with us